Wednesday, November 29th. Market analysis, Stan Ehrlich. Sorry, I'm starting a little late today at 10:30 California time. Today, the stock market indexes, and I always start out with the indexes, the E-mini, the DIA, the Qs, the Russell 2000, and go into futures contracts. So I'm going to be hurrying up a little bit today because lack of time. Now, we're in a resistance area in the indexes. We're overbought on the indexes, all of them. We have gaps below the market during this month, all of them, different places, but there's some similarities. We have potential previous historic highs, not on the E-mini Christmas contract, but on others to deal with resistance. There's a variety of things that add up to the likelihood of all of them turning down. If I'm right, then it's going to come down for about 2 or 3 weeks into the Santa Claus rally beginning, which should be a few days before Christmas. And I will detail that to the minute and date when the track record I will show you was executed. So if the 26th year later, which is this year, the track record continues, 2 years ago it made $3 grand. Last year it didn't do anywhere near as well, but I'll show you trade by trade starting probably next week. All right, let's continue with this. So in a general sense, keeping in mind, we're about to turn down, in my opinion, for a couple of weeks just before Christmas, and then turn up into the new year, into January, to continue the bull market in total new high ground. I'd love to have this market get down to the low of the day and get lower than today's lows so far. And if it could get below yesterday's low, that would generate a whopping great sell signal. I have to believe would be very, very reliable, but you never know. No guarantees in this business. But it's got all the features I'd love to see, but it hasn't happened yet. Everything's in place for it to happen. New lows for the day, and hopefully below yesterday's low, keeping those features in mind. Next chart is the, hang on, spider, same exact commentary, except we've got these gaps to close. So my downside objective at first is 441, and I'm not ruling out 431. I don't know if these gaps down here are going to get closed. They look like they're too far down. So 431 is the most I can expect, and that would be just before Christmas. That would be great. Next chart, QQQs. Resistance area, overbought conditions. We had one sell signal already that did not work. But remember, these sometimes occur during the topping out or bottoming out process, are not necessarily the lowest low or highest high like they are most of the time. Well, much of the time, maybe 50-50. But we always limit our losses and let our profits run. That's the golden rule. Let's see if we can get a bearish engulfing going here. NASDAQ, same commentary, except the NASDAQ came so close to making a new high that we made back on July 27th, I think. On this case, it was July 19th. So I can't help it. I got to say what I'm saying. Now we're only 80 higher, $1.50 and 40 cents. I want these numbers to turn red so it's lower than yesterday's close. That's the beginning. Next chart. DIA. I can't help it. Same thing. 2 days ago, Monday, we had a bearish engulfing, didn't work. Excuse me. But again, these are part of the topping out process frequently. We almost got the very top. We got the second highest high, and then I got another one in there. There's a lot of great signals this year. That was a green one right smack at the bottom of that nice rally. Okay, we'll see what happens. Russell 2000 jumped through a resistance area twice. 2 weeks ago in the process, got overbought. Today, not quite. But the point is, 2 weeks ago, it closed a little tiny bit higher on the day and immediately dropped below their support, which used to be resistance level. It closed an old gap, finally. Took it a couple of months. And now we're double topping out momentarily. Very nicely. The two highs look to be almost identical. I can't tell yet. Not that important. So if it sinks more, makes a lower low today, and keeps on sinking, it might even break below the lows of the last 2 weeks all at once. Next chart. Spider. I'm going to skip the rest. You know how I feel. Futures. E-mini. A little bit different perspective. Major resistance around previous highs. You know, if we make any highs higher than July 27th, it's going to be a new high since approximately April. Yep, that's right. Quite a long time. Obviously long-term bullish. Next chart, NASDAQ. Same commentary. Next chart, bonds. Very strong, upside breakout, looking very good. Just a second here. There we go. We had a great short sale earlier, got out a little early at the very bottom of the market, the low day, green, Ehrlich reversal, buy signal. ER3 got hit and caught on this day, 2 days after the signal, which is just great. Minor loss on the first day that we got long. From that point on, bye-bye. We have a new high and a new high close likely on the way up here on the trade. First major resistance, 119.11. I think we could get there in the next day or two, maybe. Now, this does not agree with what the stock market indexes are telling me, because bond futures going up means rates stable, going down maybe, and that the stock market usually likes going up. So one of these has to go down, stay down, and turn down like the bonds. 10-year notes, well, I'm still bullish on bonds, very long term. But when does the correction come? Almost overbought on 10-year notes. Second day on a breakout to the upside, almost hitting resistance. Maybe we'll see a little bit more upside follow through on bonds and notes, getting into resistance area for notes. We got the bottom of the market on a bullish engulfing. We bought it on ER3 2 days later, just like bonds. And up you go. Looking great. Downside correction, not to be unexpected. We got almost overbought, came super close and at resistance. How far down is it going to go? Probably just to the neckline. I hope no lower. It shouldn't go lower than the neckline, 109.18 for a couple days. So that's my downside retracements. Pretty close. That'll be a very small, little tiny dip. Nothing to speak of. See what happens next. And then up and up and up. Crude. First day up. I've got a little tiny line marked there on blue. I don't like talking about it too much, but I think it's a neckline. It acts like it. You've got the lows here for 1 or 2 or 3 days, right around November 9. You got the bottom of the market, obviously November 16 and a little bit 17. But you have a couple of minor ones here, but they're approximately on time, and they're not too low. The pattern totally is slanted downward, not unusual whatsoever for a head and shoulder bottom. And then when we broke this line today, it ran through it and jumped like a rabbit, and that's good for the breakout. Classic breakout type of activity. So, why not? It's small. This pattern says we can get up to 82.5. That's about it. And I think then it's going to turn down, down. Next chart after crude, natural gas, oversold. Look for a rally. Don't think it's going to last very long. Intermediate to long-term bearish. Can't help myself. Look at that. Boy, does that look like corn and wheat, which we'll get to in a minute. All I can expect is a little bit of a bounce up to resistance. But the resistance level, which I've marked with a blue line, starting at around a little over 3, is a major long-term super important resistance level. When, and it will, starts to get broken as the market rallies sometime down the line, it's going to start to indicate the beginning of a longer term, much longer term bull market. Depends upon how it's acting. Commentary a long time to come true. But right now, all I can look at is a bear trend, bear market, bearish expectations, and a move down to, maybe a little lower, probably not. A rally up to 3.060, give or take. Maybe up to a little higher, 3.2, and down, new lows. Next is going to be heating oil at support. Boy, what a large, broad top. If we start getting below, 1.7, it's going to go down a lot. Okay. But that won't happen. Where's it going to come down to? The bottom of the trading range so far. And that would be, and that's the bottom of support 2.6. Again, maybe oversold, but I don't think so. Drop below it. Next stopping point 2.4. There's a chance it'll get oversold by then because remember, we're not that high in the first place. Then I got a downside objective of 2.3. So there are a variety of little support areas on the way down. We'll watch for the RSI to get oversold and see what happens when it hits there. Bearish. Next, gold. Upside breakout. We did get the follow through I mentioned yesterday. Looking very bullish, frankly. Didn't expect that. I thought the market was going to stop at resistance and turn down again. This changes the picture. Guess what, though? We got the bottom of the market with a bullish engulfing ER buy signal. I showed you on the day it occurred. I talked about it rallying up to certain levels. They certainly got reached, to say the least, and they went further than I expected. Now I have to flip from intermediate iffy to long-term bullish starting yesterday. The downside corrections should be to the blue zone and hold starting at 2054. Next one's 238 and maybe down to 2021. But the correction to the downside should start soon. We might even get another 1 or 2 or 3 days of strength and stay yellow with new highs. Starting to get to fairly good resistance that's way over here. I'm watching closely for sell signals, but I have to be bullish, basically. Buying the dips is what's really going to pay off longer term. Next, silver. You know, if I drew a bear trend line, it got broken classically a few days ago. Now we're getting overbought. New highs again. Very powerful situation, frankly. I'm going to have to do the same kind of thing in silver as I've done in gold and turn at a minimum neutral to bullish to flat out bullish. Next, platinum. Doesn't have the same picture at all. We haven't gotten up to and through resistance to speak of. It frankly looks like a continuation of an intermediate to longer term bear move. I've got to say it. We need to close above yesterday's high and close this old gap and frankly get above 1,000 again and then keep going before it turns long-term bullish. Then you've got some chances of getting up to 1140-ish. Next, high grade. Well, overbought stopped it. A challenge today, currently lower net. Think it's going to start heading down. Neutral to bearish, basically bearish. We're going to see another test of support. Maybe this time it won't hold and it'll go right into new lows. Next, soybeans. Still long, minor new highs, looking good. Don't have a problem with this trade. I expect it to challenge 1390 and make it higher than that. Next, bean oil. Was bearish, was short, had a great short sale. Almost a new high since, again, not quite. Looks like it probably is going to start to make minor new highs, Modest upside objective would be something in the 54, 30, 40, 50, 58 area. Next. Meal has the makings of a very broad double top. It needs more downside work in order to be a little bit more convinced, but this is the start. Yesterday's minor new low and new low close led to today's a little bit more important lower close. If you start trading and getting below closing below 418, you got something going here. And what you got going is a very broad double top. It would be tremendously bearish. First major evidence, getting below 344. Let's just get even close to it first. First downside objective, 402. Next, corn, go by the way of wheat. Except guess what? We got a bullish engulfing today. This is a bullish ER buy signal in progress. Today is the first day. Minor bottom, too much resistance above the market. Don't expect any kind of a rally of any consequence to last any length of time. Looking for 487 if this bullish engulfing works at a minimum. 492, maybe another nickel higher. And anything above the mid 90s resistance is going to be a big problem. Where are we right now? 77, big deal. Next. Wheat has been the leader down. Made the new lows back in September. Rallies in the next few weeks failed. Almost new lows. Rally failed. Then we got new lows 2 days ago. Got oversold. Getting a little rally, just exactly like you would kind of expect. Now we're already up into a little bit of resistance, and all you got is bit more and more and more heavy-duty resistance overhead. There's no indication to me that there's any kind of major bottom being built here at this point. Time typically is needed in most cases, by a long shot, most cases. Live cattle, oversold, modest rally. Same kind of commentary I had for wheat, frankly. Longer term trend is up, but it's kind of broken. And every time it tried to go up lately, it failed miserably with a fairly significant number of new lows over a few months. We're now down low enough that you're starting to get into some significant longer term stuff. So the bounces could be bigger and better and last a little longer, but there's no trend change. I'm looking for this to turn down to new lows very soon. Next, hogs. Similar kind of comment. Looking for a test of previous lows, but at the moment it got oversold. And we've got a little bounce today. And maybe it's going to get up to 72 3/4 or, 73.5. And then turn down new lows. OJ. Well, on November 21, we got another significant bearish turning point. This one could be it. I claimed that one was it the day it happened, but I only got 1, 2, but 3 really good sharp down days. I mean, plenty of money in that, but it didn't turn out to be what I expected longer term, which was the high. We have the exact same sell signal at the top so far again. And today's little bit of a follow through upside rally from yesterday's turning point is failing already, net lower on the day slightly. I can't help it. The sell signal we are short from for 3 days now, 4 days now, on an ER3 short entry, 1 unit. That's the day after the sell signal, the red for ER3. ER1 is always the day of, don't have it running. Looking good, no problems. Look for a new low very soon and probably a minimum short term, 344. Next, cocoa. New high, overbought second day, very strong. Bull market in progress. Looks a little like orange juice, doesn't it? Yeah. Parabolic. Overbought's not that great yet. I don't know, this thing could pop up even more all of a sudden and get very overbought again. Last time was only a couple of weeks ago at 85, which is very, very overbought. Eventually led to a bearish engulfing, which didn't work. That one did great for a day in a fraction. Well, looking for a turning point down next, but you can't help but keep a sell stop underneath the market on a short-term basis as it goes higher and higher. And then all of a sudden, boom, the stop is hit and you're short. Money management involved every single time. Okay, Coke, coffee, actually no comment, and sugar maybe topping out, needs to make those new lows, can't do it for a couple of days, holding in there barely, looks like a new low close, but not the lower low. Breaking on a closing basis for the first time, a pretty damn decent bull trend line. Let's see more bearish activity before I get more bearish. I can't, neutral or bearish, a little more neutral than anything. Cotton, off of support a little bit, not doing anything spectacular. Maybe we'll go right back up to the 88 level where we did before. Let's see if we can get any kind of strength out of this. Neutral to bearish at the moment. A little skeptical. And we're back to the E-mini. Guys, we're still only up 1.14 on the spider, 160 on the DIA, not even a point on the Qs. It's not going up. It's not going down in the last few hours. You have a great day. Significant moves to come because of the Santa Claus rally. First down, then up. Have a good day.